in this video, we're going to be putting everything together, everything from all the videos, and see how it all flows together, right? So three most important time frames are the monthly, weekly, and daily because they give us the overall picture of the market. And then, so we start on our monthly time frame. We go ahead and reset, delete that, and we go ahead and put in our levels. All right. So we have price boxed in there on the monthly time frame, and we can just put it in this one window. We don't really need three lines. Uh, like I said in the previous video, this is updated from, I'm in 2024 right now, so I made those videos back in 2020. So this is some things have changed, right? I won't change it too much for a lot of things have changed with how I trade, but this is my first profitable strategy that I'm sharing with you guys so that you guys can develop your own uh, develop your own strategy, develop your own approach to the market. Let's make sure that this is visible on the weekly time frame. So on the weekly, we're looking for weekly levels now, and we want to look for what's happening recently, right? And the story that we have on the chart so far is that if price gets up to 90.64, we're looking for sells. If price gets down to 85.64, we're looking for buys. So on the weekly time frame, there isn't really any area for us to draw here. We have this area right here where there was a low that was put in, but it's not really well defined. We just have two candles defining it. It doesn't really show a major move. What I would like to see is a major move, a more distinct move made from that point. And an example of a distinct move is like this high here. Price came down, made a new high, lower high, and then it significantly went down from that point. So nothing to do on the weekly time frame. We have a downtrend, but we can't really draw because we don't have touches here. It's just made up of about 5 candles. So we like to see that on the daily time frame. So we go down to our daily time frame and we can see that we had this uptrend here. It broke the uptrend and then we got a downtrend going on right now. And we have 1, 2, 3 touches. Remember, every single line is a zone. It doesn't have to touch it exactly, but as long as it's in the general area, you can consider it a touch. So we have 3 touches, so that's a solid trend line for us. And then we can also draw this horizontal line here for our daily level, right? And we can see prices sitting right on top of that. Now another level that we can draw is right here at this low, because we had an impulse down here, we had this correction form, and we can draw our daily level there as well. And we see prices boxed in really tightly now, right? We have about a 50 pip, 60 pip range right here, right? And then it goes down to about a 200 pip range. So we got our impulse, we got our correction, and then we got a new impulse, and we're looking for a new correction to form. So waiting on this new correction to form and looking for it to push down and break beneath this daily level. Since we're in a strong downtrend that's been going on for at least a month, and we have this strong impulse that's telling us the market wants to go down. Okay, so now what we're waiting on is our correction to begin to form. And if we go down to the 4 hour, we can see that it's already started to form. And the possible correction that we can see here is possibly a flat pattern forming. We have 2 equal lows here, and we have a high put in. So we'd like to see price come back up to this high. Most likely it's going to do something like this, but we're going to expect for a flat pattern to form for price to come all the way up to here. So we have our correction that started. We go ahead and identify our kill zone right here in this general area. And then we can go ahead and place our Fibonacci's from the top of the impulse down to the bottom of the impulse. You can see the kill zone lines up with this 38.2 Fibonacci level. So we want to see price reach this level, and we'll look to enter for a sell opportunity if we see a JCP in that area, right? So price gets up to this area, we look for a JCP. If it gets a little higher to the 50 Fibonacci level, that's okay too. Just adjust this kill zone right there, and we'll look for a JCP in that area as well. And then we would look to sell and place our stops above this Fibonacci level. To be safe, I say the 61.8. If you're willing to take two shots at it, go ahead and set it at the 50 Fibonacci level, but to be safe, we can set it at the 61.8. And then we have this low that we can target here. That's more conservative, but since we are in a strong downtrend, we can go further and go to this next weekly level. That's what I would target for about a 6 to 1. So you have a 1.5 to a 6 to 1, 6.4 opportunity here. And that is everything put together. We got our impulse, our correction, we got our kill zone, we got our Fibonacci's, and we're waiting on the JCP if price reaches that kill zone again, right? Now, alternatively, we have different scenarios that could occur here, right? Now, for those that know patterns, this is also a double bottom, right? So this could be a reversal pattern. That's the danger of having a flat pattern, one of the dangers of having a flat pattern, but could be a reversal pattern. But we're not going to look to buy until price breaks this trend line impulsively. So we have to see price break the trend line impulsively, probably come to right there or something like that, at least breaking above these highs here, and then give us a corrective pattern down to the kill zone. And then we look to buy. Now, if that doesn't happen, you could also look for price to break down, give us a correction, and then look to sell, continuing down to this weekly level or monthly level. Now, that is it, guys. That's everything put together. It's real simple. We can do one more really quick. I won't go through explaining every single thing under the sun like I did there. Let's go to dollar Swiss. Oops. Starting our monthly time frame. Go ahead, box price in. Now on the weekly, we got price boxed in, and we can see that we have a level here that price has respected before. So we want to, if we look at it as an area, we can see this entire general area is really what we're paying attention to here. So I want to go for the high of that area. So the high right here. And that is pretty much it here. Gonna go down to the daily time frame. On the daily time frame, we can see that we were in a downtrend, and technically still in a downtrend. It hasn't broken this previous high yet. However, we have reached all-time lows. Ooh, not on here. We have reached lows recently, but I know on several Swiss pairs we've reached all-time lows, so I'm looking for a reversal here. So we have the strong impulse to move up. We got this correction here and looking for price to push up. We have the strong engulfing candle here. And on the 4-hour time frame, we can see we broke out of this flag pattern. All right, so we have a daily impulse and correction for the upside, and we've reached this kill zone for that opportunity, and price has started to make its push up. Now, the bad thing here is that we're in a poor area for this buy. The reason we're in a poor area is because the weekly level is right here above this high, right? So if we're going to buy this, we're only going to be targeting this high and not going to go any further. Although it's likely that it will scale up higher, but it's a poor area to buy at because we have such a strong resistance level here, right? So we have this impulsive move here, and we're waiting on a correction, which it hasn't formed yet. to come to this kill zone. And remember, kill zones are just support resistance areas, so support resistance levels. So looking for it to come to this kill zone and see if that lines up with the Fibonacci level. Doesn't. It's close to 38.2. We can go ahead and adjust that slightly to 38.2 because we want it to be ideal. We want it to reach our levels. If it gets down to this level, we'll go ahead and look for a JCP in that area, and then we'll look for buy. And we can look for a buy just to that weekly level. If we base our stop loss off the Fibonacci's, it's a 21. In this situation, I put it lower because we have this support level here, and we don't want to put our stop like just into the support level, so I put it down at the 61.8, and we'll have a 2-to-1 opportunity there. So that is everything put together. If you guys do have any questions, go ahead, comment in the comment section. I'll be sure to respond, and I will catch you in the next one.